Welcome to today's video where we're diving into a topic that's essential for anyone buying real estate in British Columbia, the property transfer tax. Buying a property comes with a lot of excitement, but it's also important to understand all the costs involved, and that includes taxes. Property transfer tax, or PTT, is one of those expenses you might not be aware of if you're new to the process. So today, we're going to go through what property transfer tax is, how it's calculated, and some details on when it applies. By the end of this video, you'll have a better idea of what to expect if you're planning to buy a property in BC. So, what exactly is property transfer tax in BC? Well, when you buy a property or take ownership of one that's registered with the Land Title Office, you're required to file a property transfer tax return and pay this tax. But here's where it gets interesting. Not everyone has to pay this tax, as there are certain exemptions that can apply, such as for first-time homebuyers or for some newly built homes. We'll get into those specifics a bit later, but it's good to know that the general rule is this. If you're purchasing real estate in BC, property transfer tax is something to look out for. One quick note to clarify here, property transfer tax is not the same as the annual property taxes you pay to your local government. Annual property taxes are based on the property's assessed value and go toward funding services in your area, while property transfer tax is a one-time cost that applies when the property changes hands. Now let's dig into the numbers and specifics for calculating the property transfer tax. In BC, the property transfer tax is based on the property's fair market value on the day it's registered with the Land Title Office. Fair market value is essentially the property's value in today's market. The general property transfer tax rate is divided into three tiers: 1% on the fair market value up to $200,000, 2% on the value above $200,000 up to $2 million, and 3% on the value above $2 million. But there's more to it. For high-value properties, if the residential portion of the property is worth over $3 million, there's an additional 2% tax on the value exceeding that amount. This is designed to target high-end residential properties. If a property is classified as mixed use, like a combination of residential and commercial, this further 2% tax only applies to the residential part. For anyone who's a foreign national, foreign corporation, or a taxable trustee, there's an extra tax called the additional property transfer tax that applies to residential properties within certain areas of BC. This is separate from the general tax and is worth noting if you're in one of these categories. Lastly, the BC government recently introduced an exemption from this further 2% tax for new purpose-built rental buildings over the $3 million threshold, which is something to keep in mind if you're looking into rental property investments. So, there you have it, an overview of property transfer tax in British Columbia, including how it's calculated and some of the important details to keep in mind. If you're considering buying a property in BC, understanding this tax can help you plan better and avoid surprises. Remember, whether you're a first-time home buyer, a foreign buyer, or purchasing a luxury property, there are different rates and possible exemptions to consider, so knowing the details can save you a lot of trouble down the road. It's worth mentioning here that property transfer tax regulations can be complex, and this video is meant to provide a general overview. We're not legal professionals, and this is not legal or financial advice. So if you're planning a real estate purchase, it's always a good idea to consult with a real estate lawyer or tax professional who can give you advice that's specific to your situation. Thanks for watching. If you found this video helpful, don't forget to like and subscribe for more real estate tips and insights.